Now, live from KUSI, this is Good Business San Diego. Sponsored by Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where we're talking about the topics that are important to you, your home, your family, your health, and your money. And the following portion of Good Business San Diego is sponsored by Wilsey Asset Management. Supply and demand for office space may be shifting in the next few years, so what will that mean for investors? Brent Wilsey, president of Wilsey Asset Management, is here with some insights.
Thank you, Roy. That is correct. Office space may be harder to find in the coming years. Now, you remember the days back a few years ago where people going back home and working from home? Those times have been changing. And for the first time in nearly 25 years, office conversions and demolitions will exceed new construction, which means there'll be obviously less space available going forward. Now, CBRE Group found that across the largest 58 U.S. markets, 23.3 million square feet of space will either be demolished or converted to space that and this is by the end of 2024. Now, what is more difficult here is when you look at construction and building of office space, it's about half that. They're only expected to construct about 12.7 million square feet. So what you have is a shortage of supply demand. Now, we do hold in our portfolio a REIT, which is a real estate office REIT, and they talked about in the last conference call that they have leasing demand that's exceeding their expectations. So you always want to invest when things are on the low side. We're in this conversion right now, you know, we're office, not filled yet. But whenever you invest, you want to look ahead 3 to 5 years. Now, you have a couple different ways to do it. Obviously, you want to invest when supply is low and demand is high, which we're going into. But a couple different ways you can do it. You can go out and buy your own commercial property building. Probably going to cost you a few $1 million. Financing may not be the best way to go. What we like to do is use REITs, which stands for Real Estate Investment Trust. This way here, you can have that real estate and commercial property and maybe only put in $5,000, $10,000 into it, collect some dividends. But what you do have is some diversification is what you'll get from REITs. If you buy just your own building, you may buy it the wrong time. You could overpay for it. Maybe that area goes into an economic recession. If you buy a REIT or invest in a REIT, it should be diversified among different areas. Now, make sure those areas that office REITs invested in are areas that are growing economically. You also want to check to see what type of buildings they have, because what is doing well in the office market is what they call Class A buildings. Now, Class A buildings are the best. Those are the ones where they've got the volleyball court, they've got the coffee shops, they've got gyms. These are where people want to go back to work. Where you don't want to go to is the B and C buildings. Those are the ones that people really won't go to. So you want to make sure you get those. They can also pay good yields. I want to point out, this is an investment for 3 to 5 years. Don't think you're investing in a REIT and then next week or next month, I made all this money. Whenever you invest, you're investing longer term for 3 to 5 years. This will turn around and do quite well for you if you do it properly. Now, all this information does come from our newsletter, the Smart Investing newsletter. That goes out every Friday at 5 o'clock, and this is designed to make you a smart investor, answer topics that you may have. Some of the topics, again, at our website, smartinvesting2000.com. Job market remains a good spot. Facebook scams are out of control. Financial planning, retirement savings rate hits record high. How do you compare? Sell gold and buy platinum. Job opening report shows there's still plenty of work out there. I love this one. Computers in our brain may not be that far away. The growth in gambling may become a problem, and the April trade deficit declines by a record amount. All at our website, smartinvesting2000.com.
All right, Brent, thanks so much. The preceding portion of Good Business San Diego is sponsored by Wilsey Asset Management, and we will be right back with more of Good Business San Diego right after this.